All right, we are live, and if anybody is on already, which I doubt, because we just got on here, we are going portrait mode today. Going portrait mode. I think most people watch on their phones, even if they are watching on Facebook. So we're going to try it this way. First thing I always have to do is make sure that these streams are working across each of the services. So I see it's working on Instagram. Awesome. So we are live on Instagram now. Let me double check and make sure that we are live on Facebook as well and see if this is working. It does look like we are live. Let's see. Yep. Awesome. So we're live on Facebook. Oh, sorry. Um, and I want to make sure that I keep the chat open over here as well. So if you're just getting on here, and this is Tugboat's office hours. So we do this every Wednesday at 3 o'clock Pacific Standard Time. And it is an opportunity for us to talk through anyone's questions regarding claims, maybe their home insurance policies. Everyone that participates in this is some type of expert in the claims world for home insurance. And so, like me, they might be a previous independent adjuster or a current public adjuster. And our experience varies quite a bit. And so I'll be in here, my co-founder, Aaron, and then Danielle and Rachel and maybe Chris as well at some point will drop in. Every once in a while, we have an attorney or another claims expert drop in as well. And the goal is for us to be able to share insights that we learn every single week, because it is every week that we learn new things about what is working as we're helping people advocate for themselves. What strategies are the most effective in communicating with their adjusters, and also what we're thinking about as the industry moves forward, as claims move forward, and what we're doing at Tugboat to try and be a benefit to that. And so today we're going to be diving in to an article that came out last week in the San Francisco Chronicle. This was an amazing article by two women named, let me make sure I get this right, actually. It was named Susie Nielsen and Megan Muntz for the San Francisco Chronicle. And they put together this incredible piece called Burned, a broken system is keeping California homes underinsured. Millions have no idea they're at risk. This is a relevant issue to anybody that has a home insurance policy, and likely anybody that has a renter's policy or business policy as well. And we'll talk about why. So we'll spend a lot of time talking about that. But if you have questions that come up about the article or about your policy or about a claim that you're involved with or have had in the past, whatever it might be, feel free to just drop it in. I'll leave the comments open on our end, and I'll leave Instagram open over here so I can see any comments that pop up there, and follow along with us. And if you don't know what Tugboat is, we are a claim support and home insurance support tool. So tugboat.claims is our website. You'll see on there that we're a membership that provides three primary things: policy education, so helping you to understand your policy, what's included in it, what might not be included in it, and what the implications of a claim might mean for someone like you. Additionally, we offer pre-loss documentation, helping make sure that you have the documentation you need, so should a loss ever happen, that you're prepared for it and that you have the documentation beforehand that'll help you recover as much as you should be getting there. And last thing, and what we're most known for, is claims support. And so that's anytime you have damage, we help and support people through their claims process. We help ensure that they have answers to questions, that they feel empowered, that they know how to communicate with their adjuster, to make disputes if they need to. We have a ton of tools that help people to do that. And so I'm going to pull in a few different people. First, Aaron is my co-founder at Tugboat. Thanks for joining us, Aaron. Danielle is coming in here as well. She's a public adjuster for Waypoint Adjusting. And Rachel is the head of claims support for Tugboat. And what that means is that she is the primary person overseeing the support that Tugboat is giving to homeowners in California, but also across the country for claims that we're supporting people through. So thanks everyone for being here. I'm excited to dive into this topic. I've been hyped up about it all week, and I know that you guys will have some interesting insights to share about it as well. And so let me just check in. Aaron, I know you read the article because you read it before I did, and it was funny because I had heard about the article, but not read it yet. And Aaron and I heard about it from somebody that we were talking to, and Aaron went and read it before me and was like, he's like, this thing's long, but you have to read it. It's amazing. And so I didn't get to read it until that night at I don't know, it was like 8:00 at night. I'm like sitting, my wife had TV on and I'm just on my iPad, just highlighting stuff. And it's like a 50-page article on my iPad is how many pages it was that I had to scroll through.
I lost your audio there.
I can't hear you.
Yeah, you're back though. Wait, no. Last thing we heard was 50-page article. I don't know. While Cameron figures that out, we can dive into a little bit. I'll intro it. But the article from the San Francisco Chronicle is really, really impressive. Now I'm getting text messages. Maybe he needs help from me.
All right. Are you able to hear me?
Yep. There we go.
There we go.
Okay.
It like cut out, and then I didn't realize it muted me after it cut out for a second. That was really weird. Anyway, so when we heard about this article, I told Aaron told me to read it after he read it. And he's like, it's long. I sit down, start reading it, and I read the whole thing. And I'm not a fast reader. I'm highlighting it. And then it's like, it's late. And I'm like, I have to start, because I knew that right after I read it, I'm like, I want to write this week's newsletter that we had to put out for mine and Aaron's LinkedIn newsletter. I'm like, I want to write it about this. I had thoughts of doing something else. And I sat down and started writing that and then finished that at like 1 a.m. And that's like I couldn't stop thinking about it and trying to get it out, because I think for the world that we operate in, which is this home insurance, this claims world of supporting people through this, so often we're trying to like reach for and figure out, like what is causing this issue? Like, why is this idea not getting across? Or how did we end up in this spot? Because it seems so illogical that we're having this dispute right now. It's so clear to me. It's not clear to the adjuster, whatever it is. And this issue of underinsurance was kind of one of those where you're just like, why is this so hard to get right? Like, why isn't this a simple thing for an insurance company to be able to accomplish? And that's what the article did for me, is like, it just opened my eyes to be like, oh, this is why, right? And we're going to talk a lot today about incentives and how when they're not aligned, this is ultimately can be the result of that. So anyways, we're going to be doing that. Looks like we had some, oh, there we go. We're back on. I had the chat open now. I had it closed for a little bit and we had some like spam comments coming in. Someone said, hello, sent a waving hand. What's your Instagram? Okay, bye. I call within like 1 second. So I'm just going to go and go ahead and pull the article up. I have the version that I highlighted, and we'll click through and kind of look at the sections I highlighted. I'll ask you guys questions about it. It doesn't have all the images in it because they couldn't print out with it. But and then I'll talk a little bit about the response that I wrote to it in our LinkedIn newsletter. So without waiting anymore, let's see if we can get all of us in here. There we go. And I'm gonna have to maximize this. There we go, back like that. All right. Hopefully, I think it's big enough that people probably hold their phones close enough to their face and be able to see it. So
can you post the article link in the chat, please?
I can, yeah. It is behind a paywall for San Francisco Chronicle. But I would say it's worth, I think you can do a free trial with them. So it is definitely worth, if anyone is interested in this topic, I would say it's very much worth doing this. Yeah. Sharing it right now, Emily. Just a second. I should have had this pulled up already, and that's my bad for not doing that. So there we go. Broken system. Oh, Chris is here too. All right. Let me double check and make sure this comment came back to those.
You can post it, like you can have it pop up on here too, right?
What's that?
Can you make the link pop up on the screen here for the feed?
Yeah. I don't know if people will be able to click on it.
That's true.
But we can see. Okay, here we go. I'm just gonna go ahead and put it in the comments. Here we go. Oh, look, somebody already did it. There we go. Oh, a few people shared it. Awesome. Thank you to everyone that did that in the Facebook feed. And I'll do it in Instagram real fast in case anyone wants to find it there. And Chris, we'll go ahead and pull you in here. It's going to be a little bit of a crowded screen, but that's okay. Chris, thanks for joining us. Okay. Chris, did you have a chance to read the article yet?
No, not
Okay.
yet.
So it'll be fresh for you. So Aaron, I'll let you kind of talk through some of these as well, because you read it even before I did and have had as much time to think through it. But the article is a broken system keeping California homes underinsured. Millions have no idea they're at risk. And so the article outlines some personal stories, and it's not just about the Palisades and Eaton fire. In fact, primarily it's about some previous fires that happened over the last 5 years, right? Going back to the Paradise fires, which was, I think, 7 years ago now. And a few other regional fires that happen, and they were able to use those to highlight this because those issues have been litigated. They've come to some sort of resolution, be that a bad one for a lot of people. And so the article tells the stories of some of these people that had their houses completely burned down. And when that happens, I've talked about this before, but a lot of people's expectation once your house burns down is that, well, I bought this policy that says it has replacement cost in it. So whatever it costs to replace my house, like this is what that's how much coverage I have. Like it's all lined up here. And so the article talks about how many people learned that they simply did not have enough insurance to rebuild their house to the same quality, maybe not rebuild it at all. So one family had to buy a manufactured home and put on the property where they had what was like a beautiful 50s home on it before. Another family had to take out a loan in their retirement for $500,000 to rebuild their house back to the same quality it was. Aaron, is there any other stories that were those are the two that I can remember, but essentially it's different versions of that is what they're talking about.
Yeah. So yeah, there was just a couple of actual stories there, and then the video that they did along with it tells more of the personal stories. But the article, yeah, really kind of focused in on a couple of main things, which was the how it happened, how the underinsurance kind of epidemic happened, and then also some of the most staggering things they're highlighting, like after the events, like how few of the homes have actually been rebuilt.
Yeah.
As a result of that.
That was the stat that you shared with me that I want you to talk about in a minute as well. So let's get into that. But if you can see the top of the screen here is one of the highlights that I think outlines the major problem. And it says the primary driver of the problem is insurance companies' reliance on a fundamentally broken system to predict rebuilding costs, which leaves many fire victims without homes and slows the rebuilding of entire communities. So this is what a Chronicle investigation found. And the article is very well investigated. So that statement there is based on a lot of evidence that dives into a program called, what's it called again, Aaron?
360 Value.
360 Value, which is made by Verisk, and it's this program that determines the rebuild value of your home. And so when you call your agent or an agent to say, hey, I want an insurance policy for my house, they're going to ask for a few details and put that into this program, and that program is going to spit out a number for them based off the data that it has. Aaron, talk about for a minute and why it doesn't function well based on what this article has to say about, like, how it's essentially how it's not being used properly, and even if it was, what makes it imperfect. And I'm going to find some other good quotes for us to read.
Yeah, I mean, that's a lot to dive into. They kind of go over quite a bit. It's the major topic of the article, but essentially, it has to do with what you mentioned earlier, like the incentive alignment, which we talk about a lot. And because the market has this kind of race to the bottom and is all talking about like insurance is basically the same, and it's just like who can you get it from the cheapest, because you have this preconceived notion that like, I mean, if your house does burn down, it's like the example, right? Like if your home
Mhm.
burns down, you're gonna get paid to build it back, and because you're only paid up to the policy limit and they use this software to set the limit, that's what leads to the underinsurance. And the reason that it's attractive, even though they get a percentage, right? The premiums are based on the amount that's being insured on that policy, when the market's so competitive, and you need to capture these customers so that they don't go somewhere else and someone else is willing to write the limit lower. Like people don't always correlate the two, right? They feel like the research is being done and the like limit that's set is the appropriate limit.
Yeah.
But the lower the limit, often the lower the premiums, and then that insurance company gets the customer. And so like it's why the incentives get a little weird, because while on the one hand you might assume they want to write it higher, really they're rather get the business. And so they use this software that they're aware and have been investigated, and there's this article dives into a lot of it, how it is inaccurate and it's known, but
Yeah, I mean, the quote here, right? At least 4 of California's largest home insurers, ones that we've all heard of: State Farm, Farmers Insurance, CSAA, which is I think essentially AAA out here, and USAA, have known for years about these critical gaps from lawsuits and government investigations, yet all continue to use 360 Value to set coverage limits for their policyholders without telling customers of the program's known flaws. So they know that there's an issue, and they're not doing anything to fix it, or not just not doing anything to fix it. They're not letting people know that these things might be inaccurate. This is, I thought, a fun quote from it, or an interesting one at that. And this is from Rex Frazier. He is the president of one of the personal lines insurance, or Personal Insurance Federation of California. Anyways, quote, "It doesn't make sense that we would want to make less money on renewals and not pay claims," Ruiz says. "Our whole premise as an industry is to help customers pay our claims and make sure they get back where they were before their loss." And I think this quote highlights one of the things that people are misguided to the most. And again, Aaron already hinted at it, but we're going to keep talking about it. And that is the misalignment of incentives. Your insurance company wants you to believe that there is no misalignment of incentives between you and them. And I legitimately think that some adjusters actually think that to be the case, right? They have this belief that, in fact, there isn't a misaligned incentive between them and the customers that they're serving. And so it's interesting that they would say in this quote, why would we ever not want to fully insure a home? Why would we ever not want to pay a claim? Right? And it's almost like the behind that statement is like, we're your neighbor. Like, why wouldn't we want to help you? Right? Like, we told you already that we're good guys. And it has nothing to do with them being like good guys or bad guys. It's the idea, again, they're not acknowledging the misalignment of incentives that they know is there, and that they're acting like is there this entire time. I'm going to go ahead to the next page. I'm going to go to a couple other quotes that I thought were really interesting. Aaron, talk about I'm going to find the quotes for it, but talk about the article portion that's what you were mentioning earlier, houses that burned versus how many have been rebuilt. I'll find the actual numbers, but just talk about.
Oh, sure. Oh, I have it pulled up.
Okay, perfect.
So yeah, they referenced a few of the fires throughout this article, but The Paradise Fire, they said that, and that's 7 years ago now. 11,000 homes were destroyed, and fewer than 2,800 have been rebuilt. And they're, of course, in this article linking this directly to the underinsurance problem, and they give a lot of evidence to support that. Another one that they give an example from is Santa Cruz County. They lost 700 homes and 144 had been rebuilt. They had, let's see, Grizzly Flats, 400 houses burned, fewer than 30 rebuilt. Yeah, and it's just that it's over and over again that this is the outcome, which is, I mean, a huge part of what drew you to draw your comparison, right, between this and the 2008 housing crisis. It's this, like, it's destroying neighborhoods and like leaving people unable to rebuild. And there's a lot of really interesting parallels that I'm sure we'll dive into deeper there. But I wanted to kind of pivot back to the point that you were making just before that, in like the knowing that this was the issue and knowing that they were writing underinsured policies. And there's a quote in this article that and a whole section where they talk about staying competitive, which I had touched on earlier. But like the quote is, people would come say, we can be more competitive if we get these costs out, we'll have lower costs. And then there's in a deposition, one farmer CEO, they quote him as saying, it wouldn't surprise me that if we tried to make an intelligent trade-off, we tried to make an intelligent trade-off between what needed to be asked to get an accurate estimate and where we were sort of bleeding into ruining the experience for the customer. And he paints this scenario where it's like customers don't want accurate underwriting, essentially. They don't want us to do the work to make it accurate, and we'll lose those customers. So it's like they want to be underinsured.
And what he's conflating there is that customers do want lower premiums, right? And what he's not acknowledging there is like, or what he's conflating is like, he knows customers want lower premiums, and he knows the only way that they can offer lower premiums is to underinsure a property. So he's saying, well, they want lower premiums. That means they want less insurance. But it's not like when you buy your insurance from your home insurer, like Farmers USA or State Farm, that your agent is telling you, okay, but this probably isn't enough insurance, even though it's the premium that you want. And that
it's actually usually the opposite.
Yeah.
You know, that they're telling you that it is plenty of insurance and we actually can't give you any more than this.
Yeah, they try to say several times in this article that the amount of that ultimately every homeowner has to choose how much insurance they want. They get to make the call as to what that is and how much it's going to be. And so it's really up to them to choose how much insurance they want. And we know we're supporting people through these wildfires, that it's simply just not the case. We will talk at the end of this. Like this isn't to tell you like, oh, there's no solution. You can't make sure your home is properly insured. There's nothing you can do about it. But it's to show that the system isn't designed that if you just let it operate status quo for you, that you can expect to be well insured and properly insured. And so we know from people that we're supporting that some of them asked for more insurance and were told that they didn't need it. Like, no, you do not need more insurance. Your home is very well insured. And the article, I don't know if it doesn't make sense for us to pull up every little quote and things like that. But one of the things that it explains, I
can give you this quote, like from State Farm. State Farm argued, and it's a quote, the coverage chosen is ultimately the customer's choice.
Yeah, the coverage chosen is ultimately the customer's choice. And, okay. One of the things, and this is what I was getting to, one of the main themes that this article talks about is that 360 value software from Verisk. And I do want to dive into Verisk and their relationship to the restoration process as well. We don't have to go into their relationship to like all insurance processes, but at least the estimating process. But anyways, Verisk has a software that you are supposed to put, I think they said 20 points of data into for them to then come up with a value for what that home should be insured for, essentially how much it should cost to rebuild it. And so 20 points of data, that's what year was this home built, what's the current square footage of it, what's the quality of the finishes, what type of roof does it have, what type of siding, are there other structure, all these types of questions are the ones that are supposed to be asked about the property that is about to be insured. Now, an agent sitting on the phone or emailing back and forth with someone asking them that question, it takes a lot of time for them to do it. And insurance companies essentially learned that one, that's too much time. They don't like their agents don't have enough time to be thorough. But also two, if they are thorough, the number that comes back is higher than the person wants to pay. Like because what they're essentially just looking for is a premium number for somebody. And so when they put in all that data and the number that comes back is, oh, this home needs to be insured for 800,000 rather than 500,000. Well, that means your premium is going to be higher. And the agent wants to close the sale. And so they sell the $500,000 one. But anyways, what has happened is insurance companies, and I remember specifically it was Farmers in this article who I am insured by for our home. And one of the stories I'm going to share is my personal one of the underwriting process for our house, because it exemplifies this to a T, like this whole process. And that's part of the reason it was so eye-opening for me. I'm like, this is why it was so bad when I was getting insurance. But those 20 points of data that need to get filled in for Farmers, they were pre-filling them in, pre-filling 18 of the 20 in just automatically. Maybe from like quick data that can be pulled online, which is inaccurate very often. The square footage of a home may be different. The online, it doesn't share what types of roof and things like that they are. So it was automatically inputting 18 of the 20 points, and the agents only had to ask essentially 2 questions to the people. And then boom, here comes your rebuild cost. Here's your premium. And that's all it was. And so Verisk had said, like, the only way for us to be anything near accurate is for you to actually get all these accurate. And then even at that point, if you ask them and all answers to all 20 of these were correct, we're still not perfect, right? We're based off of a bunch of data that isn't perfect and we don't know everything. But I know from experience, again, from myself and friends and users from Tugboat that have talked to their agents about how much insurance they have, that software is treated as if it's God's honest truth about how much it costs to rebuild your specific house. And they're not using it properly. They know they're not using it properly. One of the other points in the article was there was an internal investigation. Aaron, can you find the quote and read it, where he's talking about the claims department determined after one wildfire that all but one of the properties that they insured and that burned down, all but one of them were underinsured.
Yeah, so the quote is, claims believes all but one are underinsured. That's the quote.
Yeah. Claims believes all but one are underinsured. So out of, I don't know how many houses there were for.
Yeah. So this is, I'll read the article excerpt. So claims believes all but one are underinsured, Cleveland wrote, referring to Farmers Claims Team, a group of experts who assess damage. What should we do to prevent the problem in the future? And this was a report in 2017. So like they've known about this for a while.
Yeah. So that was internally, right? So fire happens. All these adjusters for Farmers realize, hey, all these people are underinsured that we're writing claims for. And then the head of claims, the department there, somebody higher up, sends the message to, I'm guessing, underwriting, saying, hey, all but one of these are underinsured. So they opened up an internal investigation to figure out, how is this happening? Why is this happening? And then not long after that, they learned that there was a lawsuit opened against Farmers where someone, because they were underinsured after a fire. And so they stopped the investigation immediately, because they didn't want to create any evidence that that they that they didn't want to create the evidence that showed that they were doing this. A comment from Facebook says this needs to go everywhere. Stop the bad players. Hold clients accountable to willful ignorance. Yeah, and I think the willful ignorance, Chris. Thanks for sharing that comment. That's where I think. And I know amazing agents and brokers. I don't want to throw all agents and brokers under the bus, but I do think many, and I've talked to some good ones, and the good ones will tell you that many operate with with willful ignorance. They know that if they spend too much time with somebody on the phone, they will not likely be able to close that deal, or they'll be less likely to, and they're not going to get a commission unless someone signs a contract, right? So a contract for $500,000 of insurance is better than no contract at all, even though the house may have needed the $800,000. So yeah, I agree. This article needs to go out everywhere. It's why we're super passionate about it and needing to talk about it more and more. And one of the other really interesting points in the article, Aaron, what was the name? Maybe we don't need to have it, but there was a software that was made that was very accurate. I don't know if it was a startup, but it was a business saw this issue years ago and said, hey, there actually is good enough data out there that we can go get it and we can do good underwriting. We can do good valuations. We just need to pull in all the right data and do the right valuations.
Yeah, so it was a database that Marshall and Swiftbeck built.
Gotcha.
Yeah.
So yeah, they build it. It works really well. Aaron, what problem did they have?
But what did they say? Like insurance companies aren't interested in accuracy.
Yeah, they couldn't sell it. Insurance companies used it for a little while.
Oh, it's that quote from before where I said we can be more competitive if we get these costs out.
Yeah,
that was essentially it. They were going to what was the home valuator and being like, yeah, that's great and all, but we need to be able to sell policies. So let's get these values down.
Exactly. So that company, it sounded like, went out of business because they couldn't find enough insurance companies that were actually interested in properly underwriting their own policies. So, and then going back to the quote from the insurance executive earlier, who's like, why would we ever not want to fully insure a property? Why would we ever not want to just pay every claim really quickly? And it's like, there are very identifiable reasons why you would be incentivized to not do that, right? You will save money. You will make more money because you'll get more clients. And then, and I point this out in the article I wrote responding to this one, they will save when a wildfire event like this happens. Like I did just like napkin math on that. Aaron and I did yesterday, billions of dollars in the Palisades and Eaton because they underinsured houses. Like billions of dollars is what they'll end up saving.
At least $1 billion on that fire alone.
Yeah, at least $1 billion. That's what happens when a whole neighborhood burns down full of homes that are underinsured. And so for him to say like, why wouldn't we ever want to do it? It's like, there is a clear incentive to not do it. And so that incentive certainly exists, and they've had opportunities to do it well. They did not take those opportunities. They've had opportunities to investigate it. They didn't investigate it thoroughly. And that so many of these quotes, these aren't things that insurance companies just freely publicly said. These are documents that were supposed to be sealed after a settlement with farmers, that farmers filed to seal them too late. And so they became unsealed and available for public. So like we're just lucky that we essentially got to learn all this anyways, because it was going to get thrown under the rug, or swept under the rug rather.
Chris is an agent. Is that what he's saying here?
Oh, I'm not sure. Let me see. Emily, who's our 100% attendance for office hours. Thanks for being here again. So we had a USAA agent. I'll put it on the screen here real fast. We had a USAA agent contact us last week about providing a quote for rental insurance. It was a little tone deaf, but at least we learned what our existing policy covers while we're in a rental.
Yeah, that is something to think about, like that a lot of people aren't thinking about, is that there is coverages for what happens when you're displaced from your house that are from your original policy, and if you want to weigh that against getting a rental policy as well too. That's interesting. Is Emily with USAA and they contacted to add a rental policy to it?
I think she's with USAA. Rachel, you would know.
Yeah, I'm 99% sure. Yeah.
Mhm.
But I would also warn against that, because if you cancel your policy, right?
We're not.
You can't. You have to get two
You're-
policies.
if you switch over,
There's
because there are some people that I've had ask us the question that they want us to switch over from our homeowners, which will still be, because it was enforced at the time of the loss, switch over to this policy. I
Well-
find that very concerning.
I mean, this is, I think, the topic that I want to talk about next week, because I'm having a lot of stuff going on with what's happening with policies right now. Ricardo Lara, said that they can't cancel someone's policy for 2 years after the wildfire. However, what I just had a client happen is that they didn't cancel the policy. They reinstated it for 3 times as much without a house there. And so the carrier came back and said that, well, we can't cancel your policy, but it's now $6,000 instead of $2,000 a year. And yeah, there's
with zero risk, right?
Yeah, there's not a house there. All it is liability right now, because it's just in case someone trips and falls there.
Emily said
There's a
that.
moratorium on increases.
Yeah, there should be. They tried to say that it was because of prior damage previous to the fire that they were already going to raise the rate. So it's not because the fire were raising your rate. We just didn't tell you before. We were already planning on it. It was like literally what they said on that one. It was pretty wild.
Mm-hmm. And I think this is going to happen a lot. The carrier sent out a letter saying that you can have a course of construction policy. We will sell you a course of construction policy, which is cheaper. And then they called the agent and they're like, we don't even have course of construction policies.
Yeah.
And so they canceled their policy and they had to get the whole runaround. So that's a whole other thing. But we're talking about canceling the one policy in order to reinstate the rent, or to have renter's policy. And I wouldn't say cancel it. It's just, you got to be, that is something that Tugboat will look at also, is what your coverages are while you're out of the house as well too, to see if you need to augment it with rental.
Yeah, Emily was saying that they were asking if she wanted an additional renter's policy, which I would say renter's policies are likely like even less underwritten. On that one you are more asked about how much coverage you want for your personal property.
Probably,
but
not only that, but it might
stick with the implications there. Yeah, go ahead.
I was just gonna say, if you did have to get a rental policy due to this loss, it could be included under your additional living expenses.
That's a whole nother, yeah, man. These coverage questions.
Yeah, but it's great because you're the typical agent doesn't have the background or the understanding to incorporate the nuances of how a claim affects the situation into helping you understand the coverage. And so there's just a major gap in understanding there, and it doesn't come to a head until you have a claim. And then when you have a claim and you're navigating a claim, it's that's the only time that the policy really matters. That's when you get to find out what it's actually worth. And unfortunately, that context doesn't inform selecting the policy in almost any case.
Yeah. I'll close up talking about the specifics of this article with a quote that's from the end of it. So all this was discovered from release files, like I said, from farmers. There was some other documents as well. The journalists said they poured over literally thousands of documents to put this together. It's really good. You should read it. It's in the San Francisco Chronicle. Thank you to Susie and Megan, both writers on it. But at the end of it, they say, in March of 2024, the lawsuit against farmers was dismissed 5 months after a judge denied the attorney's request for class action certification. The judge ruled that because underinsurance is so specific to each person and calculating rebuild costs so time-consuming and expensive, it would be unmanageable for the court to calculate the individual rebuild costs and damages for thousands of class members. So the lawsuit was essentially dismissed, and I want to use this as an opportunity to talk about, like we mentioned in the beginning, talking about this can make people feel helpless, right? Like what I don't know. I call an agent, they give me a policy. Like, what am I supposed to do when that doesn't work? Like, what is my recourse and what can I do? And I don't want people to feel like there is nothing they can do. This is a very serious situation and people should think about it very seriously. And there are steps that you can take that we'll talk about in a little bit to try and ensure that you're not one of these people. God forbid, should ever something like this ever happen to your community and your home, right? But the recourse is not, well, if this ever happens to me, I can just sue and things will be okay, right? Like will have been my agent's fault, and since it's their fault, like I want to. And these are the types of statements. Today I spoke to a public adjusting client who had one issue in their claim so far, and it was a serious issue. They were really frustrated about it, and they were like, "Can we just sue them now?" And I'm like, you should talk to an attorney. I'm not an attorney. If you're interested in suing, but in my experience, just so you know, that what just happened, it is not something that any attorney I know is interested in filing a lawsuit over. Right. The bar for things to be successful in court is really high. And as egregious as all this behavior was, what it resulted in this portion of the story is a dismissed lawsuit. Like the courts didn't end up being the thing that solved this for this person. And maybe they'll be able to appeal. I'm not sure where that one's going. So, anyways, I want to switch and go over a little bit the response that I wrote. And Chris, not Chris that's in the chat here, but Chris from the chat, feel free to chime in as well. It sounds like you're a pretty cool agent. Let me see if this is still sharing my other screen. Just a second. Looks like maybe. All right, so we're there. I'll have to add a scene here. Stop sharing my other one. All right, share screen. Okay. Oh, I wonder if I can shrink this to make it fit on the page. Yeah, there we go. All right, so Aaron and I started writing a newsletter on LinkedIn just about claims, about our experience founding Tugboat and the different things that we see there. And after I read this article on underinsurance and the one in the Chronicle, I immediately started writing our next newsletter. And what I related it to, in my mind, it was so clearly similar to the 2008 mortgage crisis. And I talk about the similarities there. But for a second, Chris Mooney, you worked at a bank during the mortgage crisis.
Yeah, in 2008, I was a loan officer. In 2008,
at one of the banks that went or defunct, it got bought by Chase, Washington Mutual. Mm-hmm. So I did want to ask you while you're on here. I'm sure at the time there were plenty of banking executives being like, "Why would I want to sell a bad loan to anybody if they don't pay it back? How am I ever going to make any money?"
That was pretty much the sentiment, exactly.
Right.
Like it's crazy that we would even you would even accuse us of doing that. That doesn't even make sense.
Mm-hmm. But in hindsight, it's just obviously it makes sense, right? Because loan officers make their money when they make a sale, right? And loans are immediately sold off. The incentive alignment or misalignment rather there is incredibly obvious. The point I make is when you go back and read stories about the 2008 mortgage crisis, it's weird and frustrating to read it in hindsight. Because like the writing was on the wall everywhere. Like, how did nobody know this was going to happen? How did they get away with doing it? And I'm going to just walk through the overview of the points that I made there. Ratings agencies 2.0 and 360 value gets a AAA rating. And so if you're familiar with the mortgage crisis, what happened there is that there were these bonds that were horrible. They were junk bonds. They were packaged with the worst loans imaginable, all subprime. And a bond is rated by a ratings agency like the S&P or Moody's, and they give it some grade, like they're a third grade teacher of some kind.
And the rates were variable.
What's that?
And the rates were variable. So
the rates were variable. Yeah. So anyways, the ratings agencies are supposed to look at the bonds and give them a grade, and that way those investors could look at it and be like, which ones do I want to invest in? Do I want the really risky ones with a higher return, or the really safe ones? And they rated every single one that came through there as AAA, as good as it gets. Doesn't matter how bad they were. This is like one of the beginnings of the issues. The image I have at the top of this is actually from a scene in the movie The Big Short. If you haven't seen it, you should watch it. It's amazing. And it's them talking to the loan officer from the S&P, Standard & Poor's. And she's like, if we don't give them a AAA rating, they're just going to go down the street to Moody's and they're going to get it from them, which is exactly what the executive essentially in this article is saying. Like, if we like don't cut these costs and figure this out, they're just going to go to someone else. Right. So essentially what happens in the insurance equivalent of this is that 360 Value software is saying like, oh, this software is perfect. It's the gold standard. It's getting everything right. We're relying on this thing that's a third party. And all of us that work in claims too, we know how third party opinions are weaponized against people. Right. And I'll be like, oh, I'm not responsible for coming. The agent can say, I'm not responsible for coming up with the value of your house. Verisk, the largest insurance software company in the world, is worth $42 billion. They're the ones that came up with the value of your house through 360 Value, and essentially giving the gold standard to this program that isn't perfect and is being used completely improperly. So that's number one. The second point I make is big undershort systemic risk hidden in plain sight. And so again, they knew this was going to happen. When the banks were doing this, they knew what they were doing too. It's not some mistake that's happening behind the scenes that like we're all victim to, and nobody really knows why it's there or how it's happening. If this problem causes some type of insurance market crash, we will be able to look back at it and be like, oh, you guys all knew what you were doing, right? Everyone will know that they knew what they were doing, just like the banks knew what they were doing.
It doesn't even have to go as broad as an insurance market crash, though. Like the analogy, like when you just look at a burned neighborhood that no one there can rebuild because they didn't have enough coverage, like it's right there. Like it doesn't have to be market wide. It exists in that market.
Yep.
For everybody who was affected by that fire.
Yeah. Aaron actually helped me write the closing to this article. I'm going to read it word for word at the end there, because he summarizes that really well about what it means for a community. Because I think the reason this will always get less attention is it only gets highlighted in these events that are really severe and really localized to places, right? The wildfire didn't happen across the country. It happened to 30,000 houses in Southern California, right? And it was as devastating as possible for those people. But for those that live in Washington or Colorado or somewhere else across the country, then their house didn't burn down, then they don't feel the effects of this like everyone felt the effects of the mortgage crisis. But one of my favorite quotes, and I actually had heard this in a podcast called the Founders Podcast talking about Warren Buffett, but only when the tide goes out do you discover who's been swimming naked. And so for California homeowners, wildfire season is that receding tide, right? This fire burned up and exposed an issue that was just there all along, right? And like we're all just living with this potential issue that's there, and eventually the tide goes out and people are exposed. And again, for insurance, it's more of a roll of the dice because you don't know if you're going to be the person that's exposed. But when you are, one of the people highlighted in the San Francisco Chronicle literally talked about how everyone that was affected by it, their entire lives, the rest of their lives were altered by it. One of them was like, they no longer could be retired because of this issue. Another one, again, buying a manufactured home and living in it with your large family is not the same, and it's not going to last as long. So anyways, we go over that portion. No bailout in sight. Who bears the risk this time? So this is a difference, I guess, between the two. But when the 2008 crisis happened, one of the things that was exposed at the end is that the banks knew that they would be bailed out, essentially, right? There's this amazing quote from the book The Big Short by Michael, I can't remember his last name right now. But anyways, in the book, he talks about how when regulatory executives were asked, why did the banks bail out, or why did the government bail out the banks, right? Because they had all these defunct loans. Everyone was essentially bankrupt, right? And owed all these banks a bunch of money. And so the government steps in and pays that money essentially, right? And so what the person asking this regulator said, well, why don't you, instead of giving that money to these giant banks who have the power to do these things, why don't you give it to the people who have these mortgages and bail them out individually and just pay off the loans? Kind of like bail out the people, not the banks. And the regulator said, well, if we did that, it would incentivize bad behavior. Like, and I'm not even kidding. Like, it would incentivize people to be bad borrowers. And like, it said it with, and like, you can feel it in the quote. Like, do you not understand the irony of what you just said? Incentivizing, like, and it's just insane. So anyways, here, there isn't a real clear safeguard for people like this. FEMA has a role to play in disasters, but we know, Aaron read the numbers earlier from this. 7 years after the Paradise Fire, what did the percentage end up being? Less than 30% of those homes are rebuilt, right, Aaron? I think is what it ended up being. Like, out of 8,000 homes, it was like 2,000 have been rebuilt or something like that. That, even with all the attention Paradise got, right? It was national news. Presidents visited there. The governor was there. We all remember that. There's a documentary made by Ron Howard about it that I was watching last week on Netflix. It's a very famous event. Even with all that attention, that community wasn't bailed out and built back even better and quickly. And they didn't get back on their feet the way that banking got to be recovered and saved.
And that's the one that Luke uncovered, how many people actually got billed by the city afterwards for using the free debris removal because they did it the wrong way, and now they all owe $150,000 on top of.
Yeah. I'm really worried about what that means years from now for people with it. And it's so hard. Just to give a little detour right now, what Chris is talking about is the debris removal program through LA County, which is through the Army Corps of Engineers, which they call free. They keep calling it free. And I've talked to contractors even this week. They're like, no, I talked to the Army Corps of Engineers and they assured me that they would only take the debris removal money if there was any left after we used it during the rebuild portion. They literally said, like, they will only take it if there's any left after the rebuild portion, then they'll get some of it. And I'm like, I am so confident that is not the case. And it's so hard. You can't prove it right now because the bill hasn't come to pay yet, right? Some of these things, they happen years down the road.
I worked Paradise debris removal for the big guy, and I did Woolsey, I did Glass, and for Paradise it wasn't right. Marshall, not Marshall, the Woolsey and the Glass Fire, they were right. It's exactly how they're portraying it. So I feel like they've probably learned how to do this correctly, but they did wait. I mean, I did Paradise debris removal project 2 years ago.
5 years after the fire. Oh my gosh, that's crazy. And
then Glass and Woolsey. I think it was Woolsey I did like right before.
Well, it's not the carrier, it's that the contractor that is the Army Corps contractor, whatever. I can't remember who they are. It's not actually free. Somebody's getting billed and the city gets billed, and then the city, like whoever gets stuck with the bill, has the rights to the debris removal insurance money. But if there is no debris removal insurance money, then they have the right to go after somebody for that bill.
Which, and Rachel's point is like that has been the case and it's happened. And in other fires, it seems like it hasn't. And this is the point. We have people asking us all the time right now, well, which one is true? And unfortunately, or which one's true for the Eaton and Palisades fire? And the answer is we just don't know. Like, best case scenario is that the city pays for it afterward, is that you don't get a bill for it. But worst case scenario is that you get a giant bill for it.
Mhm.
And so I have a hard time advising. All we do is really educate people and be like, hey, look, here is the here is what the city has said. Here's what the Army Corps is saying. Here's what past fire survivors have said. Here's what's happened in the past. And so make the best decision you can with this information. But I don't think anybody can say completely confidently that they know what's going to happen, because it's not in. Well, I think there are people that know, but those are government officials, and so we don't get to know exactly what's going to happen. Aaron, you said in the chat.
Ryan asked if we can do like a debris removal webinar, and I mean, that is something that we could talk to some of the other people that we know about coordinating together. What would take, Ryan, if you are part of any groups, like WhatsApp groups or anything that you would want to facilitate a webinar about something for? We can, if you message us directly, we can talk about
And
it together.
the other thing, Ryan, I'll say is it's no matter what, the answer is going to be a little bit individual to every person because of what type of debris removal coverage you have, how much you have, does it apply to all your other coverages, things like that. So one solution that we haven't talked about at all yet is Tugboat is free for everyone. So free for everyone affected by the wildfires. If you are affected, you should be using it. It's tugboat.claim/wildfire. It's a free membership for a year. We would just look at your policy and help you understand specifically what does debris removal look like for you, and then you can make the decision based off of some of that. And so
we're starting to see. Were you going to say something else?
No, go ahead.
All right. So what is starting to be shown is like the properties that FEMA has done the debris removal, like compared next to it with a one that a contractor has done the debris removal, is that all of the cement is still there, all of the tree stumps are still there. If there's a basement, it's just kind of like haphazardly kind of filled up. Whereas the ones next to it that have a contractor do it, it's a complete flat surface. And so that's what people aren't, especially if you're going to be rebuilding. Like you're going to have to do a lot of work on top of what FEMA does.
But so just so you know, Chris, what some contractors are being told is, well, go ahead and have that done. And then the Army Corps has told me, private contractor, that I can go in there and remove everything else, bill your debris removal coverage. So say it costs me.
Oh yeah, right.
Say it's $50,000 more of work. You have $50,000 debris removal coverage. They're saying, private contractor, you can go do that, bill that $50,000, and if there's no more debris removal money left over, the homeowner won't be responsible for anything.
What? Don't believe it.
And that's the point. Is like, if that's the case, Rachel's saying that has been the case in the past for some fires.
Woolsey for sure, for sure.
So,
and that was
for sure. Some
in
fires,
class.
it seems like it has been the case. That is what some contractors have been told here. But the risk is that when that has been the case in the past, when that hasn't been the case in the past, it was communicated, it seems like it was to some of the communities, maybe specifically Palisades. So I'm hopeful that it's not now. If it was me, I had the coverage to rebuild and do debris removal, I would probably be trying to go private contractor regardless, because it could be done faster, done better, and I wouldn't be worried about it. I wouldn't be thinking about it for the next 5 years. But that doesn't mean that that's the right decision for you. So last couple points from the article that we put together. Moral hazard, why the system persists. And I would say right here, I quote from the San Francisco Chronicle article, that statement about why would we ever not want to pay claims? Why would we ever not want to do the thing? Is that your insurance company, your agent, and your adjusters, they are not acknowledging the misaligned incentives that actually exist. And that's problematic for you, because for you to operate in a strong position throughout a claim and to advocate for yourself well and to communicate well, that you need to understand that. And it would be hopeful that your adjuster would understand. And really good adjusters actually know this too. Good adjusters that know what their role in their job is will usually come and say, I'm not your representative. I'm here to as independently as I can, look at this damage and estimate for it and present a report for what it should cost to fix. That that doesn't mean that I'm going to do whatever is best for you, but they'll communicate to you that, and I know personally that there are a lot of independent and staff adjusters that are annoyed by their own company's advertising. They don't like that they're expected to be the good neighbor when they show up, not because they want to be a bad person or be mean or anything like that, but they know that homeowners are not thinking through things properly when they show up and knock on the door. So last thing I'm going to read before we sign off is a section that Aaron actually wrote. I didn't credit him for it, but I'll pay you later, Aaron, for writing my closing statements here. History doesn't repeat, but it rhymes. In 2008, we watched entire neighborhoods emptied. Let me start over there. In 2008, we watched entire neighborhoods emptied, not by flames, but by foreclosure signs. Rows of homes sat vacant while families packed up in tears, casualties of a system that knew better and profited anyway. It wasn't just a housing crisis. It was a community crisis that gutted towns, decimated wealth, and left generational scars. This time around, there's ash where living rooms used to be, and families left without enough to rebuild. And it isn't because they didn't insure their homes, but because they listened to the ads and the agents and trusted that they had. A banker knowingly bundling bad loans, or an insurer knowingly selling coverage that won't cover. In both cases, the neighborhood burns and the people left behind carry the loss. So this is the reality for thousands and thousands of people right now after the Eaton and the Palisades fire. So, I mean, from all of us at Tugboat and at Waypoint, first, just want to say this is why one of the big reasons that we're offering Tugboat for free. We know that there are so many stresses that people that are going through these wildfires have to go through already. A lot of people are going to be paying out of pocket hundreds of thousands of dollars to rebuild their house, or they're going to have to rebuild smaller at a lower quality, or they may have to sell their property. And in any of those instances, we want to make sure that if that's you, that you still have support to make it through the process with a little bit of support, with a little bit of guidance, a little bit of education, so that you can make more empowered decisions. So Tugboat is free for a year for anybody that was affected by the wildfires. That's tugboat.claims/wildfire. It's also why we do the other work we do and the work that Chris oversees at Waypoint Adjusting. Public adjusters represent people and negotiate on their behalf. Chris and his team over there do an amazing job at that. And the work they do helps to inform the work that we do at Tugboat as well, meaning like what they learn from negotiating with insurance companies, from communicating with them, from the adjusters that are on site. We're able to use that to help homeowners learn how to communicate better themselves. So if you can relate to this article and have just been affected by these fires, I'm so sorry. We are here for you. We feel for you. Several of us are from California, not far from these neighborhoods, and have spent the vast majority of our time over the past few months supporting people like you that have lost everything. And if you haven't lost everything, maybe your home was partially damaged or fire debris, smoke damaged, and you're still dealing with the repercussions of these wildfires, and we don't take that any less seriously as well. So we're here for you. If you need any support, just reach out. You can send us an email, hello@tugboat.claims, send us a message, or sign up for free at tugboat.claims/wildfire. If you have damage or questions or a claim that isn't wildfire related, just go to tugboat.claims. You can see what we do there. We have made it affordable, we think, to just about anybody that has property damage, and we want to make sure that we can support you through it. So any last questions I missed? Oh, Emily, you're so sweet. She said she was trying to get through today without crying. See, Aaron, your last section.
I hit too hard.
What?
I was gonna say it was pretty deep.
Yeah, it went too hard. Emily, we appreciate you always being here. Anybody else that's dropped in here and left a comment, we are a growing community of people here in Southern California that care about the advocacy that happens between themselves, but not just themselves, their neighbors as well. Almost every user that we've gotten in Southern California. We've gotten some from online ads and social media, but the vast majority have come through referrals from people utilizing Tugboat, utilizing Waypoint, talking to their neighbors, and referring us to be able to talk to them. So we're really grateful for the community of people that we're able to stand beside and support through this process. And so thank you, Emily. Thank you, everyone else that's left us questions and given us things to talk about here. One last shout out to Susie Nielsen and Megan Muntz at the San Francisco Chronicle. You guys did an amazing job on this article. Such deep, critical research, and people will benefit from it. They are going to continue writing about it. I actually messaged Susie just this week, and she had mentioned that they're going to continue putting out more information about this issue. So I'm excited to see what else they have there. I'm sure they have a lot that they weren't able to dive into. And so keep your eyes on what they're doing there in the San Francisco Chronicle, because you will benefit from it. So if you have any questions, send them to us. And if not, we'll see you next week, 3:00 every Wednesday for our office hours. Cue the exit music, Aaron. There you go.
Bye.